HF Capital Markets, Executive VP, and here's a guy who's had it right on nickel for a while. Last time you were on, you said nickel would go higher, and it has.
Well, that's right, Pat. Nickel was sitting just above $6, and it had been there for a while. If you go back in history, people always remember that nickel got up to $22, $23 in 2007. And of course, with the financial problems in 2008, went to 4, then it bounced back up to 12, and then went back down to 6 in 2012, and it sat there for the better part of a couple of years. But we started looking at the supply-demand conditions, and we started late last year feeling a lot more confident that nickel prices were actually going to start to move, especially when the Indonesians said that they were going to restrict some of their exports, because really it had been Indonesian supply, in our view, that had caused prices to be as weak as they were. So the Indonesians had decided to tighten up the market, which is what they announced in January, and subsequently they had stayed to that course. So we're now sitting, close to $8. We were saying $8.50 at the end of the year, 10 at the end of next year, 12 at the end of 2016. And I did get some feedback from the show where people were suggesting that you're too optimistic, that's awfully aggressive, but so far, we're looking pretty good here.
Okay, even in light of what's happening in China, and I'll point out, folks, we didn't talk about it in the markets, but China is tightening up its monetary base, really.
Well, they have right now, Pat, but I'll go back to the fact that, I point out that I was once a central banker here in Canada, and the tightening by China, I think, is a short-term factor. They're trying to make sure that all the credit aspects are taken care of. What you also have to recognize, though, that if you tighten monetary policy in North America, you don't have much fiscal policy maneuverability, especially, you do in Canada to some degree, but you certainly don't in the United States. But the Chinese are sitting on almost $4 trillion in cash. So, and they've already announced they're going to do some infrastructure spending later this year. So I would not overreact, Pat, to the numbers that have come out on the monetary side, which I think is really what's driven the markets today.
Okay. How about inventories? It seems to me inventories are pretty high too.
Well, okay, there's no question about it. That, I would argue, was the single biggest problem with the big increase in nickel, particularly the nickel pig iron, which is the cheap nickel that Indonesia was, I don't want to say flooding into the market, but really putting out into the market at quite a big volume. That this led to very high inventories in the last couple of years. But if you notice, Pat, that's starting to turn. The inventory numbers are getting better. We're seeing higher demand, and because of what Indonesia has done. Plus, I don't know what's going to happen with the Ukraine, but Russia is a fair-sized producer in the nickel market as well, which I think the market is getting a little bit nervous there because we don't quite know how that's all going to play out.
Well, they could be sanctioned and their exports of nickel might be cut off, so then that affects your supply side.
Yeah, in fact, if that happens, Pat, I'll have to revise my forecast probably even higher, because I was not predicting what took place in the Ukraine, obviously, and I'm not necessarily suggesting there'll be sanctions, but who knows? It's certainly an option and a possibility if something doesn't get worked out here in the near term. So those nickel prices could go higher, because don't forget, the Russians are a big player in the nickel market as well.
Okay, so let's talk about the stocks you like. Pure nickel. It is what it is.
Right, and again, what we should point out here today are a couple of things. Number one, the companies we like are in very good jurisdictions, and they're survivors, Pat. I can remember when we had 25, 30 small cap nickel companies in 2007, and now we're down to about 5 or 6. So a lot of guys have left, done other things, disappeared, and the people that have prevailed now I think are going to end up winning because they have very good projects. In Pure Nickel's case, one of the best sulfide plays in the world, in Alaska. I like the jurisdiction, and I also like the fact they're in the part of Alaska where there's lots of infrastructure, Pat. So that's a problem in parts of Alaska. It's not a part in the southern part of Alaska. And I also think that not only do they have the project in Alaska that looks interesting to me, I like their properties in Manitoba. And people forget that Thompson, Manitoba, of course, one of the big nickel producing areas in the world. And there's still some excellent prospects at places like Williams Lake. So again, here's a company that survived, and I think because they've survived and they have cash and the management team, I think that with nickel prices going higher, this is a company people should be looking at.
Royal Nickel.
Well, Royal, Pat, is a big play, another big sulfide play. And you'll notice I'm pushing sulfides here and not laterites. The sulfide plays in Quebec. It's another one of the bigger plays in the Western world. It's advanced fairly nicely, probably cash cost somewhere in the $4.50, $5 range. So at $6 nickel, people say that's a bit skinny. At $8, people starting to like it. You can imagine how they're going to feel at $12.
Yeah, fair enough. And Victory Nickel.
Well, now Victory, some of you are going to say, well, Mark, you had that on as a frac sand play. Well, that's right. They had the frac
Yeah, I
sand
remember
above
that.
the nickel, and they've been shipping the frac sand because there's such a great market for it. But people should not discount the fact that their nickel play in Manitoba is a world-class nickel play. So, again, this company should benefit twice here. Higher frac sand prices, of which we're already shipping, and an exceptionally good nickel project in Manitoba, as well as a few other nickel projects in other parts of the country.
Yeah. And you like the sulfides over the laterites because they're cheaper?
Because laterites, Pat, higher capital costs, higher energy costs, more difficult on the metallurgical side. And I think that's the other issue. If I am convinced not every laterite project is going to go forward in this world, and that's another reason why my price forecasts are higher than the streets.
Okay. Mark, great to chat.
It's great to be here, Pat.
Appreciate it. You come with great ideas every time. Mark
Thanks a lot,
Lackey,
Pat.
CHF Capital Markets Executive VP. Quick break, and we're going to